Hello, everyone, and thank you so much for joining us today. My name's Anthony Pellegrino, founder of Goldstone Financial Group. I'm seeing quite a few people are still logging in here, so why don't we just give them one more minute and then we'll get things started. Thank you for being with us here today. I see a few more people are logging on right now, but why don't we just go ahead and get things started. So thanks again very much for joining us. Today's webinar is very relevant to topics 3 IRA and 401k tax traps that you must avoid. And real quick, this is just a disclaimer that everyone's situation is different with taxes, so things may pertain to different people. Once we have an opportunity to speak with you one-on-one, then we can talk about your specific tax saving situation. I'm Anthony Pellegrino, again, founder of Goldstone Financial Group. And hey, I'm born and raised Chicagoan for 44 years. And my wife, Rosalind, and I, going on 18 years, she and I are raising our 3 sons right here in the suburbs of Chicago as well. We kind of don't have a choice. We got all of our family here, parents, grandparents, both of our families. Again, we are in the suburbs here of Chicago. So you may have heard of us over the years. We've been very, very fortunate and very blessed to have been featured in some of the most respected media outlets from the Wall Street Journal. And you may have seen us on Saturday morning TV interviews on ABC, Sunday mornings on TV on CBS. We have a weekly financial radio show on WLS, AM 890, Securing Your Financial Future. That show we've been heard going back as early as 2007, 2008. Also, write a column for Kiplinger magazine here online. And also, Chicago Medical Society asked me to write a monthly financial column for them in a magazine for all the doctors and medical professionals for the Chicago Medical Society. And we're also recognized by Chicago Magazine, and we're winners of the 5-Star Wealth Manager Award by Chicago Magazine 3 times. But all in all, put that stuff aside, folks. What we're most proud of is the fact that we have saved or helped thousands of families, Chicagoans, just like you, successfully retire over the years. And our investment planning focuses really on helping people both get to and through retirement while utilizing investment planning on our investments to help minimize the taxes on your investments in any way possible. So today, what we're going to talk about is the 3 tax traps with your IRA and 401k. Now, take a look at this quote here from Kiplinger's Financial Magazine. It says, "You have a silent partner in your IRA and 401k, and his name is Uncle Sam." Ouch. Here's the thing. You want to think of the money in your IRA and 401k as your money, but it's really just a joint account between you and the IRS. Now, after all, you've been contributing to these accounts for years, right? But you haven't paid a dime of taxes on it. And at some point, Uncle Sam's going to want his cut. So here's something that's really important for you to know. How and when you withdraw this money from your retirement accounts could have a huge impact on how much you pay Uncle Sam versus how much of your money you get to keep in your pocket. And if you don't take some defensive steps to protect yourselves now, the money you were counting on to help you pay for your retirement could only be a small fraction of what you thought it was going to be, which means this could, lead to having a major impact on the lifestyle that you're planning to live through retirement. So you see the importance of this, right? So the question is, how much money can you save in taxes in your IRA and 401k? And at the end of this short presentation, we're going to give you a no-risk opportunity to learn exactly how much money you could save in taxes with your IRA and 401k. And it's not going to cost you a dime. Now, what we're going to do, we're going to try to keep this, we're going to stay under 30 minutes. So we'll definitely be under a half an hour today. But if you're short on time and you want to just give us a quick call, phone number's on the screen there. We can run a analysis for you at no cost to you. And it'll be a tax reduction analysis on your IRA 401k that often results in saving people tens of thousands, if not hundreds of thousands of dollars. We see it often here at our main office right here in Oakbrook Terrace. So let's go. So the question is, how much money can you save in taxes on your IRA and 401k, which is very important. And I'll tell you what, if we kind of jump into an example, right? So let's look at some examples. We love to share success stories on our radio show, in TV interviews when we're on the news. And, I want to share a quick story with you about Fred and Betty. Now, obviously, what we do is for any stories I'm sharing with you today, we change their names for their protection. But we want to give you the details so that you can understand how this can impact you as well. So think about your specific situation as you're hearing some of these stories like Fred and Betty here. In fact, this story here is the very reason I wanted to be on this webinar here today, because their story is so compelling. We said, you know what, we have to share this with people and let them know that there's solutions to reducing the taxes. So Fred and Betty, they've done a great job, saving for their 401k. And a lot of their money that they had, like most people, most of their assets, folks, was saved in their IRAs and 401ks. That's where most of their assets were. And then one day they learned that they were facing an enormous tax bill that they were going to have to pay when they decide to withdraw this money to live on through retirement. Now, their taxes on their retirement accounts. Now, folks, this isn't their account balance. This is the taxes that they'd have to pay on their IRAs and 401k accounts. And it was going to be $1,111,826. So, ouch, that's a pretty painful amount, right? So here's what we did, right? What did they do? We created a tax planning strategy that enabled Fred and Betty to reduce this massive tax bill. So we were able to get this down. Their original tax bill, simple math, was $1,111,826. We were able to reduce that and get their new tax bill was down to $324,540. So folks, take a look on the screen there. That's $787,286 of total tax savings. Now, folks, this enabled Fred and Betty to retire on their own terms and allow them to do all the things they dreamed of doing through their retirement years. And this is a great example of the power of tax planning and the impact that it could have on your nest egg. Okay, so you're sitting there listening to this webinar thinking, Anthony, $787,000. That seems like a lot of money to save. How in the world does this happen? That just seems crazy to me. Why aren't people planning for this? And folks, what it really comes down to is tax traps. So today we want to address these 3 specific tax traps with your IRA, 401k, and other tax-deferred accounts that families run into before they meet with us. And these tax traps could literally cost you tens of thousands, if not hundreds of thousands of dollars in taxes. So I'm going to run through these with you and kind of walk through what the mistakes are. So the first mistake is not having a strategy to withdraw money from your IRA and 401k. Number 2 is not having a strategy for required minimum distributions, also known as RMDs. And the third mistake is failing to prepare for future tax hikes, which we know they're coming, right? The tax train is coming. So let's take a look at these tax traps one by one. So tax trap number one is not having a strategy to withdraw money from your IRA and 401k. A lot of people don't have a full income plan of what is the best way, in what structure, and what order to withdraw the money. That's how they get hit heavily in taxes. I'm going to start with a quote from The Motley Fool. It says, "If you're not careful, you can ruin a lifetime of successful saving when it comes time to start withdrawing from your nest egg." Now, folks, contributing money to your IRA and 401k, it's very easy. Once we set it up, it comes out of your paycheck, let's say, bi-weekly, and then it's on autopilot. But when it comes to withdrawing this money in retirement, it gets complicated and confusing. And look, if you're just simply going to withdraw money from your retirement accounts without any kind of rhyme or reason, without a true income plan, you could get clobbered with taxes. And I'll give you a good example. So let's go over another case study here with a couple right here from the suburbs of Chicago. Suburbs came out, visit with us. And John worked for a local university here. Irma worked for a dental office. So he and his wife Irma were roughly 3 years away from retirement when they found out that they had a big problem. John and Irma, did a good job. They saved $517,000, in their IRAs and 401ks. But what shocked them the most was how much of a tax problem they had, and they didn't realize it. And this problem would potentially delay their plans to retire for years, causing them to work much longer than they hoped to, or it would cause them to have to make sacrifices to their lifestyle through retirement. And no one wants either one of those things to happen to them. So we helped them. First, we helped them identify the problem, okay? We have what we call our forward-looking tax analysis, and we worked with their CPA, and we helped them reduce their tax bill by $224,176. And folks, we know an extra $224,000 could go a long way in retirement. That is a significant amount of taxes to save. And think about all the things you can use that money for. Maybe that's money that helps pay for, a couple of the kids' college over the years. Or maybe that's money that ends up getting donated to, your favorite charity. Or maybe that's money that you end up needing. You may need that down the road for, additional health care or long-term care costs, right? So there's a lot of things. Maybe that's extra travel and trips that you didn't think you can take. So there's a lot of things that extra savings can go towards. So the second tax trap is not having a strategy for required minimum distributions, or RMDs. Now, according to Forbes magazine, Forbes said, think of RMDs as the IRS's version of weapons of mass destruction. Funny. But when you turn 72, not so funny. The government forces you to withdraw a portion of the money from your IRA, 401k, and all your other tax-deferred retirement accounts. And these are called required minimum distributions, or RMDs. Now, folks, there are two significant events that could happen here. And I want to make sure everyone understands this. Number one, when you take the distribution, right, by taking those out, this could end up forcing you into a higher tax bracket, so you end up paying more taxes. We see this happen all the time. And number two, you could be forced to sell your investments during a downturn in the market, so you're essentially locking in your losses, and you'll unfortunately probably never have the opportunity to make that money back again because you were forced to take it out when it was down and pay taxes. By the way, if you were to choose not to take your RMDs, the IRS penalizes you 50%, 50. Therefore, you're forced to take the money out, even if it's money that you don't need to take or don't want to take, we're forced to. So it's critical to have a plan for your RMDs, long before, years before you end up, retiring, and years before you hit age 72. Now, that reminds me of another story of Rob and Mary. So these two worked hard their entire lives. They were looking forward to, enjoying retirement. And, Rob and Mary worked really hard. They saved $788,900 in their IRAs and 401ks. Not bad, right? Not bad at all. Then one day, Rob learned how much money he would have to be forced to take and forced to withdraw from his retirement accounts when he was 72. And just like we just said here, those required minimum distributions were going to trigger a huge tax bill. That's why this can be so dangerous, okay? So what we did is we showed them a tax planning strategy that could end up helping them with a lot of their RMDs, and this strategy could save them $490,323 in taxes. That's nearly $500,000 in tax savings. Now, this is another example of the huge impact using some simple tax planning strategies could have on your nest egg. So I wish this was the end of the story here, but there's one more major tax trap that we have to look out for. The third tax trap, folks, is failing to prepare for future tax hikes, which again, we believe could be significant. Now, according to Fortune said the U.S. will likely impose monumental tax increases in the next decade. Now, why is this going to happen? Think about it. Let's be realistic here for a moment. Many people don't realize this, but right now, folks, taxes are lower than they've been in over 40 years. 40-year record tax lows here. But when you think about it, with record-breaking $25 trillion in national debt, the latest stimulus package for COVID-19 that will cost upwards of another $6 trillion that gets added to that bill. Once you think about it, it feels like every other week they're coming out and talking about more stimulus, which are likely to keep those things going. I understand why, but, bottom line is, folks, this money, this isn't free, right? This isn't free money. Someone is going to have to pay this tax bill. And unfortunately, this tax bill will likely be in the form of higher taxes. Just as millions and millions of baby boomers are heading into retirement, these taxes are likely to go up. So it's critical that you take preventative measures right now to insulate your nest egg from what's most likely to be much higher taxes in retirement. So here's the key, right? So what the key here is, what can you do about it, right? So don't just prepare and file your taxes on July 15th, and it may get pushed further out than that. But here's what I encourage you to do. Make the small investment in time right now to do some advanced tax planning, because it could end up saving you a small fortune in taxes in retirement. So here's what it all boils down to, folks. You've got a choice. You're at a fork in the road, and you can either do nothing and basically be at the mercy of Uncle Sam, or you can be proactive to protect your hard-earned savings. So we hope that sharing these stories has really made you think about your own numbers right now, your own IRA and own 401k, and what those tax dollars may look like, in the opportunity we have right now being at 40-year tax lows. And listen, you're probably wondering, how these tax traps can be avoided for you, and what those steps, what the next steps would look like. And I'll share with you what that looks like going forward from here. So it all starts, folks, with our customized retirement tax analysis. We just gave you 3 examples, right? Fred and Betty saved $787,826 in taxes. Folks, that's not on how much they saved for retirement. That's how much they saved in taxes by having a plan and a strategy. Then let's look at John and Irma. They saved $224,176 in taxes. And Rob and Mary were able to save $490,323 in taxes, almost $500,000 saved in taxes. And now we want to offer you the opportunity to learn exactly how much money you personally could save in taxes within your IRAs and 401ks with our free customized retirement tax analysis. Folks, now more than ever, you can probably agree that timing is everything. So there's some really great opportunities to save on the taxes that you will inevitably you're gonna have to pay inside your retirement accounts, okay? Throughout your retirement. We've shown you, with some of the stories here that we shared with you today, but there is a short window of opportunity taking place right now. Right now, it's a unique combination of the stock market downturn that we've seen, right? We saw a significant downturn in the stock market, and then we've also have the lowest tax rates in over 40 years. So when you put those two together, right? When you look at the lowest tax rates in 40 years and the stock market together, this creates a tremendous opportunity that could help you save tens of thousands, if not hundreds of thousands of dollars that you get to keep in your own pocket. Folks, this is commonplace. We see this very often, okay? But you don't have to, drag your feet on this, because going forward, the stock market, let's be honest, it's likely to go up, and it's going to go down, and it's going to continue to be volatile. But as we look at things right now, where we sit right now, a lot of you on this webinar here today, a lot of you have probably made back a lot of those gains that you lost earlier in the year in March. So that means this could be an excellent time to start planning on this now, because you don't know what's going to be the next shoe to drop, right? What is that going to be? Think about it. We've got record unemployment numbers. Who knows what the fall is going to bring? You've got medical experts coming out, telling us, and they're predicting we could see a second wave of this virus in the fall and possibly face a second shutdown. Who knows? Lord, I hope that is not the case, but who knows, right? One thing is for certain, there is a lot of uncertainty out there. I think we can all agree with that. There's a lot of unknowns. So here's the thing. I'll give you one other. There was a great quote that came out from the United States Treasury Secretary, Steve Mnuchin. And he just said this recently in March of this year. He said, quote, "In different times, we'll fix the deficit. This is not the time to worry about it." Well, folks, let me translate the first sentence there, the first line. In different times, we'll fix the deficit. In other words, once things start calming down, then we're going to raise taxes to help pay for this bill, to pay for this deficit. So the potential savings, as I said, could be tens of thousands, if not hundreds of thousands of dollars. We see this often. So it's time to start planning, I believe, is right now. And this current opportunity for huge tax savings, it's not going to be around. So what you need to do is take action. And with our customized retirement tax analysis, it's all about you in your specific situation. So we gave you those 3 examples of what the potential savings could be. We don't know what this is going to look like for you in your specific situation, but with some basic information, we can help you understand what tax planning strategies are for your IRA and your 401k, as well as if you have a lump sum pension account or any other retirement accounts. This could end up saving you a small fortune, in retirement. So we can also talk through how to navigate through the required minimum distributions now in advance to help you avoid costly penalties, which can be as high as 50% if you don't take the RMDs down the road correctly. We'll also talk about how these accounts could impact the taxes on your Social Security benefits, and the cost for your Medicare premiums can rise. So different ways to strategize that, keep the Medicare premiums lower. Also, we can look at if you're eligible for some tax-free retirement options that could save you even more money. The good news is we do all the heavy lifting on this, okay? And then we share everything, with you. And then we kind of break everything down and show what the savings could be for your situation. So everyone is thinking, Anthony, there's a lot of value in this. So, how much is this going to cost me, right? First off, there are a lot of advisory firms out there right now that don't even do this. They don't even offer this, which means it could be costing you tens of thousands, if not hundreds of thousands of dollars, because you may be working with the wrong firm that doesn't even do this. Now, some advisors charge thousands of dollars for a customized tax analysis like this. But for the first 25 qualified people joining us on the webinar here today, here's what we're going to do. We're going to underwrite 100% of the costs for this analysis for you. Now, keep in mind, there's no obligation here. So you literally have nothing to lose. So if you're sitting there right now thinking about this, taking everything in, and you're thinking, I've got a lot going on in our lives. I know you've got a lot going on in your life, but this is one of those key areas. When we talk about things that move the needle, this is one of those areas that moves the needle for you and your retirement in a major way. This could have a profound impact on the amount of your hard-earned dollars that's taken you 20, 30, 40 years to grow and build, to keep more of that money in your own pocket, to keep it for yourself. And we'd love to do this for everyone in the Chicagoland area, right? But because the savings could be so substantial, obviously the demand for something like this is so high right now, and there's only so much time in a day. So we want to give this opportunity to the first 25 viewers on the webinar here today. So give us a call. We went ahead and saved some time slots and put some time slots aside for you, the first 25 on the call here today. So if you've saved more than $500,000 for retirement, all you have to do is give us a call now at 630-521-3594. So that number on the screen there, 630-521-3594. Give us a shout now. Our team's standing by. Also, there should be an option that pops up on the screen here that you can click on that icon. Click on that, and our calendars will pop up, and you can actually go direct to the calendar and pick a day and time that works for you. Again, there's no cost for this. But folks, we talk all the time on our TV segments or on the radio show that retiring successfully doesn't happen by accident. It starts with a plan. And this is the part of planning that you can take action on right now. This is a key part of the plan that most people overlook. This is a fact. Most people think that there's nothing they can do for their taxes. They think their taxes are, it just is what it is. Folks, we have found through the proper planning, people have more control over their taxes leading up to retirement and in retirement if they do some preventative tax planning strategies. Now they've got more control over it now than at any other time in their life. So we really want to encourage you, and we want to say thank you, for taking the time today to join us, to listen to, some of the client stories that we shared with you today. Just like many of you, a lot of your situations may be similar to this, and we help people from the Chicagoland area on a daily basis, just like yourselves. And again, just want to say thank you for taking the time to join us. The reality is there are tens of thousands, if not hundreds of thousands of dollars at stake right now, and there's a limited opportunity for you to really take advantage of this. So you can come on into our office and meet with one of our top advisors. I will tell you, we are an essential business, and we are practicing social distancing. Our office here is an extremely safe environment, for anyone that wants to come in and meet with us. And if not, if you feel, safer from the comfort of your own home, we could meet virtually as well. That can start with a phone call. We can jump on a Zoom meeting, a video conference together, and kind of talk through some of the ways we can help you save taxes in your IRAs and 401ks as well. So feel free to come on in, meet with us personally. Our main office is headquartered right here in Oakbrook. Satellite offices all throughout Chicago and the suburbs, or we can jump on a Zoom meeting together. But we want to make sure, that we can help. And listen, it doesn't take long. We ask some very simple questions, and then we provide you with all the answers to the findings that we gather up from your IRAs, 401ks, and the tax savings we uncover for you. Share all that info with you, and then go from there. So, we look forward to meet with you either in our office or virtually, but give us a call right now. Our team's standing by to take your call, 630-521-3594, or just click on that button now, and you could schedule your meeting right now. So listen, stay safe, stay healthy, and we look forward to meeting with you.